Welcome to This Explainer. Today, we're looking at Filecoin. It's a project that promised to completely revolutionize how we store data on the internet, but, well, it ended up taking its early backers on an absolutely wild, unpredictable, and frankly brutal ride. If you've ever wondered about the sheer, stomach-dropping volatility of the crypto space, you're in the right place, because this is the perfect case study.
So how exactly did a $200 million crypto promise turn into such a terrifying roller coaster for those early investors? To really grasp the massive risks they faced, we first have to rewind and look at the sky-high expectations that fueled the initial hype. People weren't just throwing money at some basic app, right? They were betting on a fundamental rewiring of the entire internet's infrastructure. And man, the gap between that grand vision and the harsh reality, that's where the roller coaster really takes off.
Part 1. The Decentralized Storage Promise.
Back in the beginning, the vision here was incredibly ambitious. Filecoin wasn't just trying to carve out some tiny niche. They were actively coming for incumbent tech giants. We're talking Amazon Web Services, Alibaba, Google Cloud. The idea was essentially to be the Airbnb of data storage. Just like you might rent out a spare bedroom, Filecoin wanted to let literally anyone with surplus hard drive space rent it out to the world. By copying data across multiple global locations with no central point of attack, they promised a cheaper, highly secure internet that wasn't totally controlled by a single Silicon Valley corporation.
And they were super specific about their market. Filecoin was built for temporary, low-cost, month-to-month cloud storage. This is distinctly different from other blockchain storage solutions that popped up around the same time, like Arweave, which focused on this pay-once-forever model, kind of like a permanent library of Alexandria. Filecoin, on the other hand, was going straight for the commercial, temporary storage jugular.
All of this massive technological promise led to a staggering $200 million being raised during their 2017 initial coin offering, or ICO. $200 million. That was one of the absolute biggest raises of its time. Investors were just pouring in, totally convinced they were getting in on the ground floor of the next major evolution of the web.
Part 2. A roller coaster launch day.
Okay, so jumping from that 2017 ICO to the much-delayed mainnet launch in October 2020, investors finally got to see if that 3-year wait was actually worth it. And the market reaction? It was nothing short of explosive. When trading first opened on the Huobi exchange, the price started at $50. For a brief second, it dipped slightly to $46 as traders, kind of tested the waters. But then, suddenly, this frenzied trading just kicked into overdrive. Within minutes, the price wildly spiked up to $200. I mean, just imagine being an early investor watching your screen right then. The euphoria must have been absolutely blinding.
At its absolute peak, it continued to violently fluctuate, pushing all the way up to $220. It was pure market chaos, totally driven by years of pent-up speculation.
But then, almost as quickly as it shot up, the bottom fell out. The price crashed back down to $130. In just a few hours, early buyers experienced severe financial whiplash. They were literally watching fortunes materialize and then just vanish in the blink of an eye.
There's a quote from Decrypt that perfectly captures the intense, chaotic reality of what those first few hours felt like for the people who staked their money on this. They wrote, "Investors are watching with excitement lodged in their throats while terror seeps down into their abdomens." It perfectly summarizes the dual nature of early crypto investing, the dizzying thrill of the spike, immediately followed by the gut-wrenching terror of the drop.
Part 3. High hurdles for miners.
Now, behind the scenes of all this wild price volatility on the exchanges, the actual operators of the network, the miners who were supposed to be providing the storage, they were facing their own severe operational risks. You see, unlike mining early Bitcoin on just a casual home PC, participating in Filecoin required massive enterprise-grade hardware. We're talking a minimum of 384 gigabytes of RAM and incredibly fast NVMe SSDs just to process the data. Plus, they had to lock up their own Filecoin as collateral before they could earn a single cent, and they faced strict financial penalties, meaning their funds would literally get slashed for any internet or power outages.
Because of this, community forums were quickly filled with operators expressing some serious anxiety over these steep technical and financial barriers. Just look at this quote from a Reddit user. "Have you ever seen the requirement to be a node? It's scary. Lastly, have you ever put your data on the network? Want to see how? It's scary." It highlights the sheer intimidation factor here. For an average person wanting to participate in the decentralized dream, it didn't just feel difficult. It felt downright impossible and wildly financially risky.
Part 4. The 99% plunge. As the initial launch hype faded over the next couple of years, the grim reality of the broader crypto market's brutal cycles took a firm hold on Filecoin. Early investors watched in total dismay as the token's value just plummeted. Over on the community forums, members were heavily debating what felt like a near 99% drop from those chaotic all-time highs. A lot of very vocal early adopters began expressing deep frustration over the massive loss of value. They largely attributed it to a perceived lack of real-world enterprise adoption outside of those tight crypto-native circles. The sentiment turned incredibly sour, with early investors publicly expressing deep regret. One Reddit user even wrote, "Every time Filecoin starts a bull run, it quickly retreats. To me, that just reeks of market manipulation. I was a sucker to invest in the original ICO." Now, to be clear, we're not validating these specific claims of market manipulation or scams, but it is absolutely critical to observe how the profound volatility and sustained price drops entirely shattered the community's trust. The dream was turning into a very painful lesson in risk.
Part 5. Regulatory crosshairs and SEC.
But market crashes and angry communities weren't the final hurdle. Oh no. Filecoin soon found itself facing a multi-front war with global regulators, adding an entirely new layer of existential risk for investors who were suddenly getting squeezed from all sides. Over in China, authorities issued warnings about companies using Filecoin for illegal financing and unauthorized wealth products. On the environmental front, researchers started pointing out the massive carbon emissions required by Filecoin's heavy hardware demands, which directly conflicted with global sustainability goals. And finally, the looming shadow of United States regulatory scrutiny was creeping ever closer.
These compounding risks progressed pretty steadily. If we look at the timeline, we go from the euphoria of the 2017 ICO to the volatile 2020 launch, right through international crackdowns, until it eventually culminated in May 2023. This was the exact moment the U.S. Securities and Exchange Commission officially categorized Filecoin as a security. And the immediate consequence of this SEC action was severe. Grayscale Investments, which is a massive player in institutional crypto investing, was forced to withdraw its application to launch a Filecoin trust product. This regulatory hammer blow severely limited institutional investment pathways. It basically proved to everyday retail investors that legal definitions are just as risky, if not more so, than actual market trading.
When the news of that SEC classification broke, the price of Filecoin sat at a mere $4.54. Just let that sink in. It's a stark, incredibly sobering contrast to the $200 heights of its explosive launch day.
Which brings us to our final takeaway. As we've seen through this entire roller coaster ride, building the future of the web isn't just about groundbreaking technology. It's about navigating a terrifying minefield of price volatility, massive hardware costs, and severe regulatory crackdowns. So the question we have to leave you with today is this: does the ambition of a decentralized internet actually outweigh the extreme financial and regulatory risks required to build it? That is a risk every investor must carefully weigh for themselves. Thanks for joining me on this explainer, and I'll catch you on the next one.